Hey traders, welcome back to this week's weekly stock market forecast. We're going to be looking at the global benchmark indices before dropping down to the sector level in the US stock market. And we're also going to be looking at the best stocks to buy now and the best stocks to sell now in the US stock market. Just bear in mind, we also have FOMC coming up on Wednesday. If you'd like to know what my outlook is for the US dollar based on that event, you can check out yesterday's weekly Forex forecast video. Okay, so kicking off with the global benchmark indices, looking at the portfolio selection part here first. And the first thing we're going to is what? The VIX. Why? Because the VIX is the key risk on, risk off trigger that we're using. And it has been rock bottom of the performance metrics. This has been keeping us on the long side of the US equities rally that we've been getting. And nothing has changed yet. So going into this week, I do have a bullish bias on equities. I'm really only looking for long setups in the global benchmark indices because most of the benchmarks are technically pretty bullish as well. So that's the first key piece of information to pay attention to. To the long side, we are going to look at the Hang Seng. We're going to look at the DAX, and we're also going to look at the Nasdaq. I mean, these are the top three global benchmark indices that I'm going to be looking for long opportunities in from their lower bounds next week. I have been highlighting the fact that the Nasdaq, we've seen this resurgence in the Nasdaq over the last week or two. And again, going into this week, it looks like one of the best places, not just for long setups in the Nasdaq itself, but dropping down and actually getting bullish opportunities in stocks within the Nasdaq is also a good opportunity going into next week. We'll also look at the S&P 500, and we're also going to look at the Russell, and we'll also look at the Dow Jones as well. Now, the Dow Jones has not been setting up as nicely as the others. Out of all of these, I would much prefer to look at the DAX, the Nasdaq, the Hang Seng, and also perhaps the S&P 500. But we will also look at the levels for the Russell and the Dow Jones as well. And to the short side, primarily still, it's only the Kospi I'd be interested in shorts, but there's a good chance I won't trade the Kospi at all, and I'll only focus on those long setups because none of these markets are looking particularly bearish apart from the Kospi, and I do still have a bullish outlook overall because of what we're seeing with the VIX, the volatility index, in the hedge dash algorithms here. Okay, so kicking off with the Hang Seng index then, and I can only be a buyer of this market next week. I cannot sell this market. What I'd like to see is we've got, as always, the blue levels here, which is the first projected range. And then we have, although it's unexpected, we have the secondary range. So this is where we become overbought once we're trading above the blue level, oversold once we're below the blue level. And if we trade above the gold levels, we become extremely overbought during the week and we become extremely oversold during the week. And again, most of the time, you're not going to test these gold levels unless you have some kind of very, very strong catalyst. So it's unexpected we're going to get to these gold levels. However, if we do, they represent a very good opportunity for a reversal back inside the range. So going into next week, what I'd like to see is I'd like to see the Hang Seng coming down, breaching the 1943.07. This is where we become oversold intra-week, so during the week, and this is where I'm going to be dropping down, looking for tests of support and looking for bullish reversal patterns, in this case double bottom, inverse head and shoulders for a 1 or 2 day liquidation back inside the range. And this is exactly, as I was talking about in yesterday's video, this is exactly the kind of setup we're looking at in real time with GMT members throughout the week. And last week posted 7 setups, we didn't take any losses, and I think we've posted now only about 6 losses out of the last 70 setups roughly in the GMT members area. So going into next week, that's what I'm going to be looking for. If we blast through there and take out the lower bound here at the 18,888.91. Although it's unexpected, whether I'm long already from up here or not, this would be the second place. I'm going to be looking for a 1 or 2 day reversal to the upside. And the third and final thing is we're below the moving average already. You can look for this to move down, move down, move down, and then you get the momentum back above the moving average. The moving average follows it. And this is the third setup you can look for during the week. Comes in, hugs the moving average, pushes away, and that gives you that bull flag setup intra-week into the profit-taking target, in this case above the 20512.40 in the Hang Seng next week. Next is the DAX. I can either be long or do nothing next week. I cannot short the DAX. What I'd like to see is we've already started to move sideways. This is a big rally. This is a big rally, nice momentum. It should be continuing to the upside in the coming days and weeks. I would personally like to see it pulling back, correcting, and below the 20127.18, That's the area we start to enter the buy zone during the week. And this is where the odds swing in our favor for a 1 or 2 day reversal to the upside. So dropping down, looking for those bullish reversal patterns on the 5 minutes, 15 minutes. If we push all the way through there and we get to the 19,848.45, although this is unexpected and I might already be long and just risk managing this, but this is the second place because we turn extremely oversold intra-week below this level. This is the second place I'll be looking for a 1 or 2 day reversal. Whether I'm long already here and risk managing it or this is just an initial position, below the 19,848.45 is the second place I would consider pulling the trigger on a long opportunity in the DAX next week. And the third and final thing is we're already making our way below the moving average. You can look for the consolidation. It gets down towards the lower bound, but it doesn't get there. And then you get the strong momentum back in the other direction. And it pulls back, hugs the moving average. Moving average always tracks it, comes back, hugs it, and then you get the push away, the bull flag into the 20684.65. Great profit taking target to the upside next week in the DAX. Next is the Nasdaq. Now, I can only be long the Nasdaq next week. I cannot short the Nasdaq. What I want to see is I want to see the Nasdaq coming down, taking out this low. And there's a gap close down here as well, which is quite nice. And there's also a stair step, which is not that far below the bottom of the range. So if we come down and we take out the projected weekly range at the 21286.11, once we trade below here, we enter the buy zone. This is where I'm going to be dropping down onto lower time frames, looking. And I don't usually buy straight away at the level. I let it go into this area and then I start to look for bullish reversal patterns. And once we get those, usually, we're looking to capture 1 to 2 days worth of movement. That out of 5. We have 5 trading days in a week. I'm looking to capture in each asset between 1 and 2 days worth. So that's what I'm going to be looking for in the Nasdaq. If we can blast through there, which wouldn't be necessarily good because once we're below here, this is where I'm going to start looking. I might already be long. But if we unexpectedly come down to the 20791.98, maybe we get some bearish catalyst that where nobody's expecting and we see the Nasdaq sell off all the way down to here. This would be the second place I'd be looking for a 1 or 2 day reversal back inside the bigger gold range. And the third and final thing is you can look for the Nasdaq to break below the moving average in this case. It starts to make its way down towards the lower bound, but then what happens? You get what's called a fast market. You see this pushing higher. And as you get the momentum back in the direction of the overall trend, the moving average tracks it. We get a pullback and it pushes away into the upper bound in this case at the 22274.38. Next is the S&P 500. I can either be long or do nothing. Selling the S&P 500 next week is not an option for me. Coming into Christmas now, we are likely to see a end of year rebalancing. This tends to be negative for the dollar and it does tend to see a Santa Claus rally pushing US equities higher. So I only like long opportunities next week. What I would personally like to see is I'd like to see the S&P come down, take out the 5980.26. Once we take out the lower bound here of this range, we enter the buy zone. And this is where below this level, I'm going to drop down, start to look for those bullish reversal patterns, double bottoms, inverse head and shoulders for a 1 or 2 day liquidation back inside the range. The second thing is, although it's unexpected, it does happen occasionally, and if we break all the way down, we push through the buy zone and we take out the other side of it here at this gold level, below the 5909.44, this is the second place I will start to look for a potential reversal for 1 or 2 days to the upside. And the third and final thing is you can see we're already correcting because we're below the moving average here, and then we get a break back above it with momentum, and it should be clear like this, pushes above it. In this case, takes a little bit of time, pulls back into it. But look for that kind of bull flag setup where it hugs the moving average and then that first push away into the 6121.91. In equities, very often you get usually just one of these during a week in the 1 hour time frame, sometimes 2. Usually bull flags and bear flags intra-week, you might only get 1 or 2. Okay, so moving on to the Russell and the Dow Jones, just to point out the 3 markets we've looked at, which are the HSI, the DAX, and the Nasdaq. So the top 3 we looked at, those are my favorite benchmarks going into next week. After those 3, I'd be looking at the S&P And then after the S&P, I would look at the Russell and the Dow Jones. So I don't like the Russell and the Dow Jones to the long side as much as the others we've looked at, but we will look at the levels, and they are also on balance buying opportunities still. So what I'd like to see in small caps, if small caps can continue to trend down, taking out the 2286.07, and we also take out this low. That's actually a really nice setup where we take out a prior low and we trade into the buy zone. This actually adds weight, especially if we can start to fail below this level, for a snapback inside the range for 1 or 2 day reversal. If very unexpected, but if small caps end up making their way all the way through the buy zone and out the other side, the 2225.24 is the level that below this we start to become extremely oversold during the week, and the odds of us snapping back are even greater than they are when we first trade down below the blue level. It's about a 7 out of 10 chance of snapping back once you breach the blue levels, and about a 9 out of 10 chance of snapping back inside the range once you breach the gold levels. Those are the prevailing market probabilities for these assets. And the third and final thing, of course, is you can look for the bull flag setup where we start to see small caps coming down. They then break up with momentum. The moving average follows and tracks it. And then you get the pullback into the moving average, the push away. And in this case, once you trade above the 2407.72, that is a great profit taking target next week for small caps. And the final benchmark we're going to look at to the upside is the Dow Jones. I prefer the others, but on balance, I will still be looking for potential opportunities. What I'd like to see is I'd like to see the Dow Jones continue down, take out the 43,321.77. That's where we enter the buy zone in the Dow Jones. This is where I'll be looking for the momentum to the downside to start to stall, to look for those bullish reversal patterns for a 1 or 2 day reversal back inside the range. If we breach this and come all the way down to the 42815.48, and sometimes when it does that, I'm already involved with a long position here. Well, this would be the second place I'd be looking to pull the trigger again for a 1 or 2 day reversal. And very often, if I get long here as well, as we pull back, I cost average the initial losing position for a break even and move on. The third thing you can look for again is the bull flag intra-week, where we're coming down and you get the momentum reversal, moving average tracks it. And that sets up your bull flag setup, hugs the moving average, pushes away into the 44334.34. That is the upper bound for next week. And if you start to trade above there, the odds of continuing with any real significance are diminished. So it's a great profit taking opportunity for any longs next week in the Dow Jones. And the final benchmark we'll look at is the Kospi. The Kospi, I'm only interested into the short side. So if I'm going to short anything, it would be the Kospi next week. What I'd like to see is I'd like to see the Kospi pulling back, taking out the prior high, and in this case, breaching the 2563.33. Once we trade above that, we enter the sell zone next week in the Kospi. And this is where I'd be dropping down, looking for those bearish reversal patterns, in this case for a 1 or 2 day liquidation back inside the range. The second thing is if we blast all the way through as a backup plan, a plan B, whether I may be short from here or not, if we push through and we take out the 2632.20, this is the second place next week. I'll be looking for a 1 or 2 day reversal. And the third and final thing, of course, is you could just start to see the Kospi pushing back, and then reactively, you're looking at it, you're waiting, you get the breakdown with momentum, very much like this, pulls back, breaks down, pulls back into the moving average, moves away, pulls back into the moving average, moves away. So the moving average tracks it down, and that is what sets up your bear flag opportunity, in this case down to profit taking target and the lower bound at the 2425.58. Okay, so moving on to the sectors of the US stock market, and we're looking at the internals of the stock market here. This is one of Stanley Druckenmiller's favorite indicators, is looking at the internals and the interplay in the internals of the stock market. And this is something that very often gives a leading signal as to incoming risk on and risk off. As it currently stands, we can see XLY, consumer discretionary, probably the most cyclical of all the sectors, sitting right at the top. And, coming into Christmas, is this a surprise? Probably not. XLC and then also XLK, the largest weighting of all the sectors in the S&P 500, is also in the positive side. So really what we're seeing is we are seeing pretty risk on internals in the stock market. And to the short side, XLU, the most risk off sector, is still down, where we should be looking for a short rotation. This is very risk on. And also XLE down the bottom, very risk on as well for the overall stock market. So very bullish internals for the US stock market heading into next week and into the back part of December. So in terms of generating alpha, once again next week, where are we going to be looking? We're going to look at two stocks which sit in the consumer discretionary sector to the long side. We're going to look at two big XLC stocks that I like to the long side next week as well. We're also going to look at two stocks within XLE, which I'm looking at to the short side next week. And we're also going to look at two stocks within XLB, the materials sector, to the short side next week. Okay, so kicking off the individual stocks with two of the XLY stocks I like to the upside. The first is Tesla. Tesla is a market that I've been highlighting to the upside in previous weekly stock market forecast videos, and look at the massive rally it's had. So once again, this week, I do like Tesla to the upside. What I want to see is I want to see Tesla pulling back, preferably taking out the lower bound at the 397.19. If we take out the 397.19, we become oversold during the week. We enter the buy zone between these two levels. This is where I'd be dropping down, looking for bullish reversal patterns for a 1 or 2 day liquidation back inside the range. If Tesla comes all the way down and takes out the 35815, something pretty negative will have happened, and it's not expected that it's going to do this next week. But reactively, as a backup plan, whether I'm long already here or not, this is the second place I'd be looking for a 1 or 2 day reversal to the upside in Tesla. And the third and final thing is look for it to break below the moving average, consolidates, and then you get the break back above the moving average. The moving average tracks it, just like over here. And as we pull back and hug into the moving average, that's where you get your really nice bull flag setup intra-week into the profit-taking target to the upside in Tesla is 475.26. The second consumer discretionary stock I like heading into next week to the long side is Amazon. Now, we're already starting to break down below the moving average, which is great, because if we can get continued weakness next week, which takes us below the 219.40, it's where we enter the buy zone, and this is where I'm going to be looking for bullish reversal patterns, double bottoms, inverse head and shoulders for a 1 or 2 day liquidation back inside the blue range. If for whatever reason, as unexpected as it is, we drop down, take out the 211.34, some very unexpected bearish catalyst comes out and we trade below this level, this is the second place. Whether I'm long already from over here or not, it's the second place I'll be looking for a 1 or 2 day reversal back inside the bigger range, in this case, in Amazon. And the third and final thing is, as we're already below the moving average, look for it to kind of come back, correct, and then you get that momentum breakout. It should be clear. You shouldn't have to squint. It should be very clear that you've got momentum above this. It flags into it and you get that bull flag set up, in this case, into the profit taking target, the 235.51. Here's a really nice example of that. Breaks above it, consolidates into the moving average, and then you get your push away. Okay, so moving on to the communication sector. The first one I like here is Netflix. Now, Netflix has a lower bound sitting at the 885.56. And what I like about this setup is look at the double bottom over here. Breaks, and now the breakout level, the confirmation breakout level of this double bottom sits right at the 885.56, roughly give or take. So if we come down, we take this out, we're also going to be stair-stepping the breakout pattern over here. We test this. This is going to be a great place to drop down, start to look for momentum to fade, and for bullish reversal patterns for a 1 or 2 day move back inside the blue range. If Netflix, unexpected as it is, takes out the 852.25, something very negative would have happened. However, that would set up a secondary opportunity to look for a long position, whether I'm already long from here and risk managing it, or I get an initial opportunity from below here. They're always very good opportunities. That's the second place. Either way, I'll be looking for a long opportunity in Netflix. And the third thing you can look for is we're already below the moving average. Look for it just to break back above it. Again, with momentum. The moving average tracks it, and then you can look for that pullback into the moving average and the push away into the 952.17. Great profit taking target to the upside next week. Top of the range in Netflix next week. And the fourth stock I like to the upside going into next week is Meta. Sits in the communication sector, and the lower bound of the weekly range sits right at the 596.39. If we pull back and we breach this again, we have prior highs over here. So a nice setup where we trade into the lower bound, we breach it, we become overbought during the week, and then we stair step into prior broken resistance turning support. This is going to be a place I'm going to be looking for a 1 or 2 day reversal back inside the range next week in Meta. The second thing, if we breach all the way through the buy zone and we take out the other side at the 572.43, this is the second place, although it's unexpected. If it happens, this is the second place I'll be looking for a 1 or 2 day reversal to the upside, whether I'm long already with an initial position or not. And the third and final thing is we're already below the moving average. So again, look for it to consolidate, to pull back, and then look for that rally. With momentum, moving average follows it, and you get the pullback into the moving average, pulls back, pushes away. Look for that bull flag setup into the upper bound at 644.30. Okay, so wrapping up the video with 4 stocks I like to the downside, starting with Dow, which sits in the material sector XLB. I'd like to see this coming back this week, breaching to the upside, the upper bound at the 42.30. We enter the sell zone. This is where I'm going to be starting to look for momentum to fade, dropping down onto the 5 minutes, looking for bearish reversal patterns for a 1 or 2 day liquidation back inside the range. If we blast through and take out the 43.75, we become extremely overbought during the week. And if we take out this high, that's going to be a great place. Whether I'm already short or not, this is going to be a great place for a second opportunity for a reversal back inside the range, in this case the bigger range with the gold levels. And the third and final thing is that bear flag setup in this case. Look for it to pull back, breach the moving average, and then trade back down below it. Look at it, it hugs it and it pushes away. So you can look for that again next week. Sells off, the moving average tracks it, pulls back, bear flags into the moving average, moves away to the 39.41, great profit taking target to the downside in down next week. The second material stock I like to the downside next week is LYB, very weak stock in a very weak sector. If we can start to pop higher next week and we take out the 78.19, especially if we start to take out these highs, this is going to be a great setup. We start to take out the prior highs over here inside the sell zone. This is where I'm going to start to look for any breakout traders trying to break above these highs to start to fail, momentum to fail, for them to pull their positions, and you get that liquidation back inside the range. If we end up coming all the way up and closing this gap and taking out the 80.72, this market becomes extremely overbought intra-week, and this is the second place, whether I'm short already or not, that I'll be looking for a potential reversal back inside, in this case, the gold range. And the third and final thing is, as always, you can look for it to break above the moving average, and then you know you're starting to get a correction and you're not just continuing to trend. Breaks above the moving average, breaks back down below it with momentum, the moving average follows it, and you get that pullback into the moving average and the push away down to the profit taking target, in this case below the 73.14. And finally, looking at 2 XLE stocks, so in the energy sector I like to the downside. The first one is Oxy, very, very weak stock in a weak sector. And again, if we can pull back and breach the 49.44, we enter the sell zone, but look at this, right into the head and shoulders breakout area. So this is going to be a really nice place to start to look. If we can push into this area, start to look for the momentum to fade, for those bearish reversal patterns, looking for a 1 or 2 day liquidation to the downside. If we unexpectedly blast all the way through and take out the 51.24, this would be very bullish, probably an overall trend reversal, but it would be the second place. I'd be looking for a reversal back down inside this gold range next week, should we breach this level, whether I'm short already or not. And the third and final thing is, again, you look for that kind of bear flag where you break above the moving average, it starts to make its way towards the upper bound, but then it fails. And usually you get a break with momentum, the moving average follows it. You look for the pull back into the moving average and the move away, in this case down to the 45.83. And finally, we have Diamondback Energy, ticker FANG, F-A-N-G. This is a market that I'm interested in to the short side. I want to see it start with some strength. I want to see it breach the 169.85. If it does that, we enter the sell zone between these two levels. This is where I'm going to start to look. You know, do we get a failure of momentum? Do we get those bearish reversal patterns in this area? That's what I'm going to be looking for next week. If we blast all the way through and take out the 176.36, this is where we become extremely overbought during the week, and this is the second place I'll be looking for a 1 or 2 day reversal, whether I'm short already or not. And the third thing you can look for is look for it to break back above the moving average, start to track towards the upper bound, and then it fails, and that gives you this bear flag setup. The moving average tracks it, and again pulls back into, and this happens over and over and over again, into the moving average and away, into the moving average and away, into the moving average and away. And you can look for this down to profit taking target to the downside next week in FANG is the 156.82. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-Trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge-platform is included with every GMT membership.